Hey, what is up, everyone? Welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. Today, I'm going to be doing a little bit of a different video. I'm going to call it Stocks I Use. And I'm going to be taking a look at different stocks of products that I use. I just went around the house for about 5 minutes, took a look, wrote down some names, and thought I'd take a look at the charts and see if there's any deep value in any of these stocks. And after you guys watch this video, let me know in the comments if you like a video like this or not. Because one of the things I often talk about in the stock video is that it is a great way to have insider information on a product if it is a product you use. You can tell if the product's getting better, if it's getting worse, if it's something you like, something you love. And then from there, you can consider maybe this is a stock that I might put some of my hard earned money into. Then, as we get to technical analysis here, looking at TradingView, we look at ways or areas, times that we can dollar cost average into it where we can get deeper value. So, starting off with Google, I like their product, I use their product, I love their product. I think it's great and it's going to be great in the future. Would I invest into it right now? Here's a couple of quick ways that I take a look at a stock and whether or not I will. So, Google, it's near a yearly high. So frankly, I would not. Deep value times where I would consider buying Google. This is the blue line is the 200-day moving average. That's where I start to consider it. If it's near the 200-day moving average or the 50-week moving average. Now, the 50-week moving average tends to be the area where stocks will bounce off of in a bull market. And as you can see, it's done that. And when it gets under the 50-week, that's when we can see a reversal in the trend from a bullish to a bearish market. But let me remind you guys here at Market Psychology 101, my expertise, it isn't as a financial advisor or anything like that. So obviously don't take my word as the only word that you consider by any stretch. I am not a financial expert. I'm good at math, very good at math, and I have this expertise in psychology. And what I've used with that is looking at times to invest when we have fear, when we are oversold, when we are low on these moving averages. Those tend to be great times to dollar cost average in and invest long term. And now we're talking about stocks we like, stocks we use. And going back in time, even when we saw the price of Google at the 50-week or under, those were the best times to buy. You got to look at it differently. When it goes down, what's the easy way for our brain to think is that, oh, the stock market sucks, this stock sucks, it's going down, it's worthless, I'm going to stay away. That's our first instinct that our brain goes to when we should be getting excited. Because what do I like to say on here? If you liked a product when you bought it, I don't know, let's say here, then you should love it when it's here. Okay, it's at the 50. If you liked it here, you should love it here because you are getting that stock at a discount. And again, let's shift our perspective here. This is helping you look for deeper value in stocks rather than just chasing the hype and the good news. Okay, going over to a little bit of technical financial research, and this is just one area you should start. There's so much more you should do. Research the company, try to unbiasedly look at the positives and the negatives. But if you go to MarketWatch, is a great site, type in any stock, go to financials, balance sheet, look at the total current assets. Okay, you can do total assets too. Total current 171 billion, total current liabilities 82 if we round out billion. It's like a 2-to-1 ratio. Anytime the assets are much higher than the liabilities, that is great. And the reason that is great is because the next time, it's not a matter of if, but when, the next time there is a big recession, like a dot-com bubble, great financial crisis, the companies that don't have greater liabilities than assets, the companies that don't have that will be better suited to survive in the long term. Google, I feel very confident it's going to be around in 10 plus years. some of these airline companies where the liabilities are way higher, I don't feel as good about them being around in 10, 15 years. Just thinking back to times as a kid, there are a variety of airlines, you'll see this in movies, where they don't even exist anymore. And some airline stocks I look at, that's what I see. I see the liabilities greater than the assets. So that is one area you can even begin to look at whether or not it's a healthy stock or not. So Google, it's a product I use, product I like. The technicals are very strong. And I would not consider dollar cost averaging in my hard earned money until it came down to some deeper value, at least under the 50-week moving average. I've shown you guys I have buy sell signals as well. If it gets under the 50-week and you want to look for more price structure, more of a confirmation and a buy signal on a weekly or monthly time frame, hey, that's great. Let's go to Amazon. I'll quickly move through this one because I want to talk about some stocks that aren't Mag 7 stocks. Amazon, great company I like, company I use. And you can see here, when was it at these deep value times? It was at 124. It's at 186. You can make great money just by last October or the end of, yeah, this is the end of 22, early 23. It was all the way down at 80. You could have gotten a 2x in value, but within what, a year and a half. That's really good. And so Amazon, great looking company, and these would have been good times the dollar cost average. And let's move on. Sonos. I saw that I had a Sonos speaker, and I love it. It's a product I like. What does the chart say? Well, so by the way, someone asked about how to draw a fib. I'll remind you, here's a fib retracement. Click it, and I go from the prior high to low in this case. If it's in a big uptrend, new highs, you can also draw from the low to the high. Make sure we're on log here. Click the fib. Make sure that it's in the log as well. I've shown you guys how to do this, but I'll just remind you again, just make sure that's clicked. So Sonos, what's really cool, this is like do or die moment here. So from the high to the low, got down to about 10. But what do we see here? It's at the 382. When a stock crypto makes a new low, but then gets it back above the 382, that's a really good area to look for to see if it's reversing trends. And not just that, what else do we see? All these moving averages are converged right here, and the RSI on the weekly is at the 50. So should it get above all this and not be a fake out like we had here, get above and actually test and even get through the 0.5, those are all steps you can look at to say, hey, this is bullish. So we have the 382. Okay, step one, good. We get above all these moving averages, create them, make them support. Step two, good. Get through the 0.5. Hey, I think then Sonos is on its way. Smaller company, $2 billion market cap. So, we'll see whether or not this company survives in the long term or not. It is a newer company, stock IPO'd in 2018. And from the lows it created, way back here in COVID times, this was a higher low. So that is good. But maybe long term, hopefully it can turn out and be a good stock. Garmin. I have a Garmin watch. I love it. Absolutely love it. What does Garmin stock look like? This stock looks pretty fantastic. Now, if you were able to get it late 22 when a lot of stocks were tanking, I just showed you Amazon was at deep value there as well. You would have a 2x right now if you got it anywhere down here. So Garmin, great stock, strong looking stock. Look at that candle. And it has a 32 billion market cap. So Garmin, product I use. Stanley Black & Decker. They, under their umbrella, they have a variety of tools that I use that I really love and like. And I've drawn a fib on this one before. And I like how there's higher lows in the structure down here. It's getting above the 50-week, the 236. Next, it needs to get through, what did I tell you guys about, the 382? And look what's coming down to the 382, this 200-week moving average. By the time it gets there, they might meet. And should Black & Decker, Stanley Black & Decker get above that, I think that would be very bullish for this stock. Now, we're just looking at these stocks in a vacuum, okay? Obviously, if the market as a whole were to have problems, like it did here with the COVID crash, Obviously, black swan events, bigger market problems will affect everything. That could always send a stock down further. But overall, I like the strength this is showing. I have insider knowledge on Black& Decker because I like their products. I use their products. I think they're pretty good. Inversely, what's a product I use but I don't like as much? One that comes to mind right away is McDonald's. McDonald's, I remember how much better the food was in the 90s, and it just seems to be getting more and more fake and cheap over time. And also with inflation, just not worth it as much. With the prices going up, it's almost ridiculous that going to a local restaurant, I'm getting way better value for my food than I ever was compared to fast food. So, McDonald's would be one product where, I have insider information because I use their product once in a while in a pinch, and it's nothing that I'm feeling better about. And plus, McDonald's is more of a real estate company. I don't know enough about it. If you do your research, you like it, great. If you want to put money into it, I hope you make money off of it. Let's keep going. What would be another one? Home Depot. I think it's just HD. Go to Home Depot a lot of times, too many times. And right now, what do we got? It's at the 50-week moving average. Not a bad time to dollar cost average in. It would be the beginning of a good time to dollar cost average in my opinion, in a structure that goes all the way to back here. Cool. A lot of red candles. And do know if, please don't invest money all because you heard Market Psychology 101 on YouTube say, hey, this is a good time to dollar cost average in. Please don't. Nothing I say is financial advice. For the love of God, make your own decisions, do your own research. This has yet to be confirmed that it isn't a falling knife. Let's actually take the RSI off. Again, I talk about the different buy sell indicators. This is one of them. It doesn't have, it's showing the sell signal. It doesn't have a reversal of a buy signal. And obviously here, buying the V better than just buying the dip. Okay. Now, that's more timing the market. But if let's say you don't have the time, frankly, and you're just spending time in the market looking for good areas to DCA, dollar cost average, and this would be the beginning. I wouldn't think it'd be a bad idea if any of you chose to. But do know, as we see back here, it can go lower. I'm thinking more long-term perspective that over time, 10 years, do I believe Home Depot is going to be around? Yes, I do. And I would have to also do enough research, take a look at the balance sheet like I showed you to be convinced that, okay, I can put in some money into this one. Pepsi. Now, do your research on Pepsi, Coke, Hershey's. They're great stocks, and they're not just soda companies, by the way. I don't know if a lot of you guys know this. Even some of the cereal companies, they're not just that. They usually have a giant umbrella of products that we use. So I'm not just talking about the soda here. I'm not even that big of a soda person. So do your research. That's the umbrella. Pepsi, Coke, those are the umbrellas where, products like Powerade, Gatorade will be under as well. So Pepsi, what do we got here? By the way, drew the fib from the macro high to low. It's above these moving averages, getting above the 0.5, starting to look reversal and trend bullish. That is great. Even taking a look at the yearly, yeah, it got above all this crap, and now it's looking good. But again, what I tell you guys, if we get under the 50, if you would have bought any of these, if you would have bought the 200 week moving average on Pepsi, that would have been a great time to dollar cost average in. So Pepsi looking good. Coke, I looked at that one yesterday. What's another product that I saw? Yeah, I was thinking about different ones I use online. Etsy was one of them, and I've heard, yep, here we go. I've heard this product has been hammered, and oh boy, is it. It's still forming newer lows, so do be extra careful on this one. Could you be getting deeper value? Yes. But like I showed you with Black& Decker, how that one was creating higher lows, had some better structure. This one wicked down. So, we would still want to spend more time looking at whether or not it could turn around. And this is only technical analysis. do look at the balance sheet like I showed you before. But Etsy, that's if I had to guess, I wouldn't be surprised if it still got down a bit lower. Let's see. Starbucks. Oh, yeah. I wanted to take a look at Starbucks because that one had a huge red candle. Now, overall, we do have higher lows. If you're looking for, let's say you have Starbucks stock and you're like, God damn it, why? We can make the argument it does have higher lows. However, we also have lower highs. So, it doesn't take a genius to see the trends, the ways things are going down. Now, you can do from the wicks, sure, or from the bodies here as well. And just you can see what's happening here is that things are tightening up, and as they do tighten up, you want to see a break above, of course, but as long as there's higher lows, that's good news for the medium term. And yeah, look at this weekly massive sell signal down to 73. It's underneath those weekly moving averages. On the monthly, what do we got? It's underneath the 100-month moving average down to the 200. Now, let's say you like Starbucks, you use Starbucks, and I would fall under that cap. I like some of their coffees, and my wife especially loves their coffees too. So as we move back and look at these moving averages, those tend to be rare, great times to buy. Great financial crisis notwithstanding. Okay, it tends to be great value times to buy. So maybe this is a great value time in the long run to get some Starbucks stock. And yes, it could go lower, but again, if you did enough research, you like it, you believe in it, this is one you could look into. Let's take a look at maybe just a couple more. 3M. I saw, man, I have so many 3M products. I was just looking around the house. This was months ago, but I noticed, like, what is this 3M? And I looked more and more into the company, saw their stock was getting hammered. And look at this, even on the monthly, I had 3 monthly buy signals. Now, that isn't everything. It had monthly buy signals on the way down and just kept going down. And I'm sure people are feeling really good if they got 3M back here, when there was a confirmation of a reversal and they're like, yay, 3M's going to do great. Never mind. But here, to me, there is more structure. God, this one would have been brutal because buying the V compared to buying the dip, it would have seemed like good at the time, especially the structure back here. We have structure back here, so 3M, is gonna have to do well. Hopefully, it's not another one of these, but it can actually do a little bit better. But what did I tell you before? We have the 382, we have the moving averages as resistance. If it can get above all that, even to the 0.5 and continue up higher, that would be good. You can see how 3M here got to that 786. This is why I like looking at fibs and moving averages. You can see how different things come into play. Got to those fibs and came down. So hopefully 3M can get above all this crap and the 0.5. I think that would confirm possible reversal. Of course, the getting past the 170 here, obviously it would be ideal. But yeah, some deep value on 3M. And you know what? I will leave it here. We'll leave it here in 3M. Here's another thing to remember and consider. Stocks are down for a reason, okay? It's for multiple reasons. 3M, look at this. This is March 2020. Guys, it was already going down before the COVID dump, okay? That's not a good thing. And it is brutally going down here. When I researched 3M, one of the reasons is it had a big lawsuit on this hearing aid technology, billions of dollars, and there is a little bit of a split in the companies, or 3M, a portion of it split off, which can lower the value. So there was some other red flags there, and those are some of the things you want to take a look at when you consider buying some of these stocks. And you want to objectively consider and try to be as unbiased as possible, the goods and the bads, and know that, hey, this stock, it was going down before COVID, which you don't see often. It was going down for a reason, and then it had more reasons to go down. So do know, for as great as deep value is, and crypto, I think, has corrupted my brain a little bit in this way too, that some of the cryptos that get brutally brutally just sold off in the bear markets can come back in big ways, and you can make big money off crypto. It's very much educated gambling. Stocks aren't quite the same, so there is a bigger risk there, and just something to keep in mind. Again, try to be objective and look at the goods and the bads. Anyways, let me know what you guys think of this video. Stocks I use. I'd be happy to take a look at any stocks that you guys are interested in and do some quick TA, technical analysis on that, see where they're at. Of course, I can see, with the views and everything, people are more interested in the crypto videos, the ones I do on the Bitcoin rainbow chart and the state of Bitcoin crypto overall, price-wise, and my Bitcoin miner videos. I also like doing stock videos, too, just for me, because with as volatile as crypto is, if I'm able to get some great profits out of crypto and roll those into some really good stocks for the long term and have my money work for me and not have to worry about it as much, not be as stressed out about it like crypto can be, that would be a better thing. So hope you guys enjoyed the video. Let me know what you think below. And yeah, have a happy Sunday. Take care.